Okay, so here we have the S&P. This is just the price action, and again, back to this rising wedge that we had. Today's session managed to break below the accelerated lower trend line of the rising wedge. We do now have a full-fledged reversal on the S&P as well as all of the markets. So do understand that the markets are suggesting with today's session that much more downside is to come. Now, in yesterday's video, I had also mentioned that we needed confirmation of a reversal by showing a series of lower highs and lower lows, and also to push below this 1350 level, a decisive break below that level, and we now have that. And one other thing that I also wanted to point out is that we were not sure if this was a back test of this channel that we had, and now we found out today that it clearly was, and that this first move was the start of something much larger. And here it is on the daily time frame. You can see that we clearly broke the 20-day moving average. The MACD line, like I said, I was looking for it to push further away from the signal line. We got that. The histogram bar pushing lower. The stochastic and the signal line are both now moving in agreement. They're both pushing downward. And take a look at the Russell. Doesn't this look familiar? It's almost identical to the transports. Now we have a clear move below the 50-day moving average. I'm watching to see if this MACD line can, break below the center line. We now have the 10 and the 20 beginning to curl downward. This is beginning to show that prices are breaking support level after support level. And you can see it here up close on the hourly time frame. There is no sign of divergence on the MACD. Prices have taken a fairly large hit. The 50-day moving average has now crossed the 200, or it has for now 2 sessions. It has sloped now, the 200, to one that is flattening, and I'm looking for that to then curl downward. Now here I've used the histogram bars and the RSI, and it's clear that the RSI is fairly oversold. We do have divergences on the MACD, but the moving averages are pointing straight down. The 10, the 20, and the 50 should act as resistance should prices move any higher. Here we have the Dow Jones Industrials average, again a break of the rising wedge pattern. You can see that clearly within this entire range. Prices pushed well below that. So again, just showing you that other averages are also confirming each other. And here we have the euro and the break out of its rising bearish wedge. Again, has follow through. We're continuing to see downside. The RSI gave us a heads up with a slight divergence. The histogram bars, again, divergence. It's no different than looking at the dollar. You can see that we also had the bullish divergence with the break out of its trend line. Today's session produced a higher histogram bar, the RSI pointing straight up. We were able to break above these levels that I was looking for. If you look in my last video, I explained exactly what I was looking for out of this. Now with today's move again in the dollar, we managed to break above the 50-day moving average. We are getting somewhat stretched above the 10-day moving average, so it's possible that we may consolidate again before we move higher. I do think there's more upside in the dollar. We're also coming in at this previous level of resistance. The MACD is coming close to its center line, so we'll have to see how it reacts to that. But for the most part, everything looks bullish. And just looking at it here on the hourly time frame, we do have a slight divergence. This swing high was smaller than this swing high. There is this gap that I was telling you about before. The stochastic is overbought. So again, I'd like to use my Fibonacci retracement levels just in case we do pull back. The MACD looks like it wants to curl back over. I do want to just say that if we decide to pull back, and this is just based on speculation only, it would be more or less just a consolidation pattern. This is not a full-fledged reversal. I want you to understand that on the hourly time frame, sometimes it can give you a heads up in terms of pullbacks, but they're not significant enough to really be foreseen on the daily chart. So this is, again, a much lower time frame when looking at price patterns. Look, you can see on the VIX that the ADX line has curled up. The bullish cross of the DI line still remains. The histogram bar as well as the MACD line have pushed up today at a fairly nice gap. Things are looking more bullish for the VIX, suggesting that volatility is coming, much more of it. This is a chart of gold, and actually it's the GLD that you can see here, the MACD looking like it wants to break below the center line, the signal line also curling downward, the bearish cross on the DI line suggesting weakness. We did break another support level again today. We're coming right in at this cluster zone, so the metals are breaking down. You can clearly see this. And silver usually follows suit with gold. You can see that the bearish divergence has been complete. On an intraday basis, we did pierce below this previous low. We have a DI line now that has given a bearish cross. So I'll be looking for more weakness in this metal as well as gold in the days to come. The MACD histogram bar has ticked back down. And here's a run through on Apple. We finally got the MACD bearish cross today with the histogram bar dipping below the center line in negative territory. You can see the ADX turning down off of fairly extended levels. We did break this trend line. Actually, let me redraw it for you so you can see a better point of where it was drawn from. So there you can see, and it almost looks like the intraday high of today's session was the back test of the trend line. So we do now have a breakdown for Apple. And one last thing with Apple, I was saying in yesterday's video that we really need a decisive push below the low of yesterday's session, which is right here at 526. We did not get that, although on an intraday basis we did manage to go as low as 516. So it's just showing you that along with the daily indicators, weakness is beginning to spill into this chart. And this is the XLF, the bank financial ETF fund. We did get a bearish DI cross with today's gap lower. The MACD line has pushed back down. You can see that we're still kind of above the horizontal support within this sideways range, so I'll be looking for a follow through in the days to come of lower lows so that the financials are confirming this lower move in the market averages. Oh, and one last thing before I go, guys, I have under the Good Morning Futures tab of the blog where I post in the morning a chart of the futures market, just to give you guys a heads up for what you can expect out of the price action in the early morning if you're interested in that. So you can go on over there and check that out, and have a good night.